Imagine waking up tomorrow to find your bank account has doubled. Sounds amazing, right? But what if everyone's bank account doubled? You could finally buy that dream car until you realize the car's price just doubled too. That's not wealth. That's inflation. And it's the sneaky side effect of trillions of dollars being printed out of thin air. But why is it happening? And who is really behind it? Stick around, because the real story is far more jaw-dropping than you'd ever expect. Let's talk about money printing, the modern version. No, we're not talking about literal printing presses running overtime like it's Monopoly night at the Fed. This is digital money conjured up with a few keystrokes, often backed by absolutely nothing. In just the last few years, the U.S. Federal Reserve created over $8 trillion. That's trillion with a T. And they're not alone. Central banks around the world have joined the party. The Bank of Japan, the European Central Bank, even emerging economies like Turkey have been spinning the invisible money wheel. So, why? To understand this, let's rewind to 2008, the great financial crisis. Banks were collapsing. Housing prices were falling harder than your crypto portfolio. The system was teetering on the edge. Quantitative easing, or QE for short. A fancy way of saying, we're going to create a ton of money and inject it into the system. The idea: boost lending, revive the economy, and prevent a full-on collapse. It worked, sort of. Markets recovered, but so did bad habits. Debt soared, asset bubbles inflated, and nobody really turned off the money hose. Now fast forward to 2020. The world shuts down. People lose jobs. Economies stall. Governments panic. And what do? You guessed it. They hit the print button hard. Stimulus checks, corporate bailouts, PPP loans, relief packages with more zeros than a NASA whiteboard. In total, over $10 trillion globally was created in record time. It was the biggest monetary injection in human history. But here's the kicker. When that much money floods the economy, prices don't stay the same. They explode. Let's be real. Inflation isn't just a word economists throw around to sound smart. It's a silent tax. Your dollar today buys less tomorrow. Gas, groceries, rent? Up, up, up. The stuff you need gets more expensive. Meanwhile, the stuff you own, like stocks and real estate, goes up too. Sounds great, unless you don't own any. That's how money printing widens the wealth gap. The rich get richer, assets inflate, while the poor get squeezed by rising prices. So, if it causes all these problems, why don't they stop? Because they can't. The entire economic system is now addicted to cheap money. Imagine the global economy as a junkie. And printed money? That's the drug. Take it away and things get ugly. Markets crash, companies fold, unemployment spikes. But keep feeding the addiction and you build a bubble so big, it eventually explodes anyway. It's a damned if you do, doomed if you don't scenario. Here's the uncomfortable truth. Modern money is fiat currency. It has no intrinsic value. It's not backed by gold, silver, or any real asset. Just trust. Trust in the government. Trust in the system. Trust that the money in your pocket is still worth something tomorrow. But every time more of it is created without adding real value to the economy, that trust erodes. History has seen this before. Weimar Germany, Zimbabwe, Venezuela. Print too much money, too fast, and you don't just get inflation. You get hyperinflation. Prices double in days. People carry cash in wheelbarrows. Currency becomes confetti. Money printing isn't just economics, it's control. When governments can create money at will, they can fund wars, elections, stimulus packages, and debt repayments without asking permission. But here's the dangerous twist. It delays the consequences. It hides the rot under a shiny surface. Until one day, confidence breaks. And when confidence goes, the whole system unravels. So what does this mean for the average person? If you're sitting on cash, it's losing value. If your wages aren't keeping up with inflation, you're effectively getting a pay cut every year. If you don't own appreciating assets, stocks, real estate, commodities, you're getting left behind. That's why financial literacy isn't optional anymore. It's survival. The rules of the game have changed. The money isn't broken. The game is rigged. And the only way to win is to understand how it's played. Because behind every trillion-dollar print job is a simple truth. They're not saving you. They're saving the system.